At Numerian Capital, we bring you the latest stock news each day. Please like and subscribe so we can bring these articles to you each day. Thank you.
Today, September 19, 2022, this ridiculously cheap Warren Buffett stock could make you rich. If you follow the moves of billionaire investor Warren Buffett, you're likely to pick up stocks for a good price. Buffett goes for stocks that trade for much less than their intrinsic value. The idea is the market will eventually recognize the true value of a company, and that company's share price will rise over time. This is part of the strategy that's helped Berkshire Hathaway, with Buffett at the helm, to report a compounded annual gain of more than 20% over the past 56 years. That's compared to a compounded increase of 10% for the S&P 500 index. Now, let's take a look at a Buffett pick that could make you rich. A company with performance potential. Procter & Gamble, NYSE, PG, isn't one of Buffett's biggest holdings. But that's okay. The consumer goods giant still fits in with his investment strategy of choosing great companies that will perform well over the long term. Pang is part of our everyday lives. The company sells popular household brands like Tide laundry detergent and Oral-B dental products. About half of Pang's sales are made in North America, the rest are generated in Europe, Asia, and other parts of the world. Pang's fabric and home care business contributes the most, making up 35% of revenue and 31% of profit. In recent times, rising transport and commodity costs as well as unfavorable foreign exchange rates have weighed on the company. Still, Pang has managed to deliver growth. The company reported results for the fiscal 2022 full year in July. In the report, Pang said net sales rose 5% to more than $80 billion. And 3 out of its 5 business segments reported sales increases in the fiscal fourth quarter. Over the long term, Pang has demonstrated its strength. The company's annual revenue and profit have generally gained over the past few years. And return on invested capital has been on the rise. Return on invested capital is particularly important because it indicates a company has invested wisely, and is benefiting from that. 2 big advantages. Like many other companies, Pang suffers from higher costs during times of rising inflation, as the company said during its earnings report. But Pang offers 2 big advantages. First, it sells products people can't go without, even when times are tough. Second, Pang's brand strength across business segments keeps customers coming back. 7 out of the 10 best-selling diaper brands on Amazon, for example, are Pang brands. Now, let's talk about valuation. Pang shares trade at 23 times forward earnings estimates. That's down from more than 28 just a few months ago. At the same time, as mentioned above, Pang's earnings continue to grow, defying today's economic context. Pang pays a $3.65 annual dividend, currently yielding 2.64%. Even better, the company is known as a dividend king. That means it's raised its dividend for at least the past 50 consecutive years. Considering all of these points, Pang looks ridiculously cheap at today's level. Now let's get back to the idea of getting rich. Pang could be part of the recipe if you combine long-term performance and dividend payments. Over the past decade, for example, Pang shares have climbed 100%. So, over time, Pang has helped investors more than double their money. Of course, it's never a good idea to put all of your money into one stock and expect that to be the ticket to wealth. Always invest in several stocks and diversify. As part of that strategy, Pang could be a great addition to your portfolio, and a key player in your plan to get rich.
Thanks for watching Numerian Capital News. Please come back tomorrow for another stock news update. Thank you.